Good morning. It's Monday, December 9th, about 6 a.m. Central Time. Overnight, the precious metals are surging after Friday's flat trading session, with the non-farm payroll data showing 224,000 jobs created and the unemployment rate ticked up to 4.2%. It left a mixed trading session in the precious metals on Friday. So some headlines to watch here and what I'm kind of watching today. We started seeing U.S. equities. They are pulling back from all-time highs. We have one key data point this week that's going to affect all the markets here. Wednesday, we'll see the CPI data where month over month they're expected 0.3% as well as the core. Thursday, we will have some additional data. We'll have PPI and then also initial claims. Now, overnight, the metals in a lot of different markets out there are surging because of the fact that China, the PBOC, they pledged to continue to ease its policy stance and provide more stimulus. So we saw U.S. Treasuries, they started to decline as far as the yields and are at the lowest level since October. That's helping boost all these metals out there. So if you look at the 2s, the 10s, and the 30-year, those Treasury yields all lower on the overnight session. So looking at the overnight price action in precious metals and focusing on the metal sector, we got gold at 26.78. That's near the highs of the trading session. The low in the overnight session, 26.49.70, the high 26.82.50. So we're right up there near those highs. So I would look at that 26.50 kind of as that bull bear line. A lot of intraday traders on Friday were trading around that. They were buying kind of those sell-offs below it, trying to sell it just above it. And then people that were looking for a larger breakdown, they were actually shorting a lot of the gold market when it jumped above there at 2,600. So we've had a lot of battleground lines here in the metals as far as I get this inside perspective on watching hundreds of different traders trade online and everything through our company, and I'll see what kind of price action and what their mental thought process is on there. And as long as we stay within these consolidation ranges, you're going to have those people kind of battling it at different levels here and there. Now the silver market, not real nice big move upwards in the overnight session, 32.25. The range was 31.37 on up to 32.37. So we're right near the highs of the session as well. If you notice that bottom range, that 31.37, Friday, when I posted the metals minute, I told you 31.39 was about the low end of the session as well. So you can see that that's a key level of support on a volatility adjusted basis. Now you do have copper futures up 7 at 427, platinum futures up 23 at 957. That's when we've been looking from a seasonal tendency. It tends to rise from these lower levels here in December and into January. So it's a market that we really like and favor to the upside. If you get the metals edge, I do break down all the seasonal analysis on the different metals out here for the month of December. Now the oil market up 87 cents here at 68.07. So you want to throw up a 100-day moving average on that daily chart. Your resistance point's going to be right around 70.50. Mid 60s, that's your support level. Now if you look at what we did on Friday for our fund and then also for a lot of our clients, we were adding different contracts for crude oil, whether it be options, futures on the January contract, futures on the March contract, because we do believe that a lot of these factors, as far as the Trump administration wanting to ramp up production, we believe that a lot of that is already baked in. We believe that some of these upside policy stances, as far as China easing some of their policy stance, boosting some of trying to boost their economy, is going to lift some of those prices up. And then we were also prepared for the imminent collapse of Syria. This is something we've been watching as rebels have advanced and surrounded key areas in Syria. So we were kind of playing in as a wider power struggle that could develop over here. And you've got a little bit of geopolitical risks and tensions going up, and that could also be providing a little bit of a tailwind for that gold market. Now the US dollar index, what was disappointing on Friday was we saw the dollar break down and we didn't see any kind of upside momentum in the gold market. I believe that's a lot of rotation into other foreign currencies as well. So we're seeing like the euro and also the British pound. They are rising here this morning. I believe if we get a breakdown in the dollar index below that 105.57, we'll continue to see that head and shoulders pattern develop. We have Bitcoin correcting after breaking through 100,000. So that's been another one where that 100,000 is a psychological level. And what I'm seeing from my perspective is people coming into that market in the high 90s, selling in the low like 101 to 103 area and kind of trading that back and forth. The S&P 500 down 7 at 60.91. If you're trading the Dow the Dow was really breaking down. It tested a previous low from a few months back. And the Dow Jones, the way that it's weighted, the largest impacting stock on its directional move is going to be Goldman Sachs. But the second one is that United Healthcare. And with the passing of that CEO, that stock has been under significant pressure here with a $30 correction on Friday. So because of that, potentially that could be what's weighing in on that market. So you're going to want to watch the United Healthcare, see if it starts to recover here. And if a technical bottom had formed, then perhaps the bottom on the Dow Jones is in. So other headlines that I've been following: Trump, he said he had no plans to remove Fed Chairman Jerome Powell from office. So that is really reassuring for at least myself, because I've been involved with Jerome Powell and monitoring his policy stance. And I could kind of see from his demeanor when he does a lot of his speeches, and just reading the speeches, I could tell the tone and how he's going to adjust policy rates. So it's easier for me to kind of predict what is the impact on policy stance, and then how will it impact the dollar index, 2s, 10s, and the gold market. So good thing for me on there. Now, this is what really started to drive the metals overnight. And this was kind of your first, if you watched gold and silver, they shot up right out the gate, then they kind of backed off. And the shoot up out the gate was that China's central bank continued to expand its gold purchases in November after they took about a 6 months pause. So the bullion held by them rose about 160,000 ounces last month, and it's now up to 72.92 million ounces. So they added to their stockpiles for 18 consecutive months. They stopped adding to it in April, and then they kind of took a pause. And if you look at when we get into April and May, that was the peak on like silver, copper, things like that, and it just kind of faded out after that. So maybe we'll start the next wave up from here. If you shift to the CME's Fed Watch tool, and this is really interesting because the data has been quite supportive on a lot of these markets. It shows that the economy's been robust, the labor market's been resilient, things like that. There is an 87% chance that the Fed cuts rates by 25 basis points at the December 18th meeting. 1 week ago, we were at 61%. So it's nice to see that move up, but it's a little bit scary because of the fact, if we see some of the data this week, like the core PPI and CPI come out much hotter than expected, and those claims dip down. Will that really do a rug pull as far as he doesn't cut rates and he pauses? That could really rock some of these markets. So as a trader, I'm going to get a little bit more defensive again with like put options, tighten some stops, use a rally like what we're seeing in the metals here today to maybe lighten up and then readjust my position sizing. Remember, position sizing is very key in risk management when you trade futures, commodities, or any kind of leverage product here. You don't really want to be a hero going into some of these particular moves. You know, this isn't the Super Bowl every day. It's not win or lose everything in one shot. So other key technical levels. So what I'm watching for these metals to break out in a range is that the gold market, the chart pattern is still consolidating here sideways. The resistance has been that 2690 level, which is a November 29th high. The 50-day moving average is 2701. The trend reversal point, so that was 2647. It dropped about $10 since Friday, so it's 2739. So we want to see a breakout to the upside. Now with this heightened volatility overnight, today's probable trading range is going to be 2660 on the downside, 2697 on the upside. And then you got 2643 as your key support level. Now, if you look at the silver market, silver, the chart looks really nice here. We are back trading right at that 50-day moving average at 32.27. The trend reversal point, it dropped about 8 cents at 32.61. So as these come down, if we get the breakthrough, you're going to see, because the price action has been consolidating for really like a month and a half, that when you get a breakthrough some of these key levels to the upside, we could see a surge in volume and also open interest in those metals markets. So 3190 is your key level of support on the downside, 3263 as your upside resistance point. If we break below that 3190 though, it could wash back down to 3155 would be kind of the bottom of the consolidation period, and then 3120 as your level below that. So you guys got any questions? I'm at an Airbnb in the middle of Florida here, so I'll be reporting back all week long. Basically, the only days that I might not be able to do a video is going to be Tuesday, so tomorrow, and then Friday would be, those are 2 big days for us. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.